Good evening, ladies and gentlemen. My name is Jeff Kohler, aka The Option Addict from www.tradingaddicts.com. Welcome to my weekly watch list. I'm going to start off with a little bit of market analysis, and really it's not going to take much to paint the picture, but what we're looking at right now is a potential breakout. With the S&P Cash Index trading right up around 940, futures right now indicating right about the same, 940 and change. Futures are up here a little bit. The bulls are going to need to sack up and show some follow-through in order for this market to get outside of this trading range we've been dealing with for the last couple of months. But now if I were you, I'd be thinking along the lines of being on the lookout for any kind of market trickery. And what I mean by that is, you'll take a look at this range. Last time the S&P was trading up at around 940, 950, this was the breakout. Not a whole lot of follow-through. From that point on, we saw a pretty good-sized correction in the S&P. Lots of talk about the head and shoulders pattern that was developing. What was the conclusion? That was the breakdown. So the market, as you know, is capable of a lot of pain. For all the bulls that got heavily long here, they got crushed. For all the bears that got heavily short here, they got crushed. Right now, I think the best thing to do is to be cognizant of the last couple movements that we saw like this in the S&P. They didn't really result in a whole lot of follow-through. So if you do see prices trying to take out that 950 level early, look for some confirmation. Look for good, healthy volume levels. You know, a lot of this rally here has come on controversial volume, depending on what stocks you're looking at. And a lot of it's been the euphoria that we've seen from certain earnings announcements. Now, speaking of earnings, we do have a tech-heavy week in terms of earnings. That's likely going to generate how the market moves. But I think the key to this week's trading is to keep your time frames nice and short. Be able to correct any moves you've made if you're on the wrong side of the trade. And last but not least, be defensive. As we've seen, the market's capable of kicking you in the ass. So here's what I got planned tonight, folks. The usual. Got a couple of dips to buy. Even though not too many stocks have shown dips in the last week's worth of trading. I got a few. I've got some rips to sell. Plenty of those. And I've got your everyday potential breakout candidates and breakdown candidates. So have a look. Now, in terms of my price pattern selection, not a lot to choose from. Anything that was looking like a reversal pattern has already broke on out. Anything that's looking like a continuation pattern has already continued. So what I spent time looking for is the next round of breakout candidates. If the S&P does trade higher, if we do see some follow-through up past 950, I'm looking for the next stocks that are going to break out. So for the most part, I'm 100% continuation patterns here, and they all happen to be triangles. Deal with it. Let's go through the list. We're going to start with PMCS, PMC Sierra. Beautiful little triangle developing here. Trading right up there towards resistance. Got earnings coming right around the corner in about a week or so. But I like the way price action's been trading up here. If it takes out resistance, you get long into that, sell into strength. Stock likely has, at least from what I can gather here, the movement to make it up to about 9 and change before that earnings announcement into market strength. Next, I like Red Hat. Now, on Friday, I heard that they were going to be the next company introduced to the old S&P 500, which means you're going to see a little bit of a breakout come Monday morning. Depending on where prices open up would depend on whether or not I'd want to trade this. If it's at about 21 or so, I'd still think that's pretty reasonable. I was looking at this as a breakout candidate anyway, with or without the extra fundies piling into old Red Hat. But the reason I like this, earnings already passed. The next reference point here is a good 10% away. I think you got to buy into that. Next, AutoNation. I've been talking a lot about this one lately. Been watching for a nice, clean trade with some good volume behind it, up past about 18.5, 19 in that arena. When and if that happens, I think you got to buy this and look to sell into some strength. JCPenney. So I'm watching retailers here, and I'm a little bit more of a bear, but they haven't really participated as much to the upside, and they could be getting to coil up and explode here because of their lackluster participation thus far. If they do, And what I'm watching is the bullish percent for discretionary stocks right now. And if that prints a reversal, then what I'm looking for is a good long setup. And I think JCPenney is that candidate, the way it's been coiling up here. I'd be looking for a nice, clean, sharp break, something that takes it up to about maybe 31 or 32 in a couple of weeks. Next is ticker symbol CBG, CB Richard Ellis Group. There it is. Not a lot of movement to the upside on Friday, but that's okay. Looking for a nice clean move about 9.5 or so. If that's there and that's supported by volume, I think you got to buy into it. China, FXI. Already looking at a breakout here. So at this level, or even if you get lower prices come Monday, I don't think that's going to happen. But if you get a dip buying opportunity from here, this pattern suggests a pretty good movement to the upside. And I think you can time that along with the S&P if it trades past 9.5. Rather than going out and buying S&P calls or NASDAQ calls, I'd buy FXI calls with the relative strength we've seen in China. Here's one of my $10 darlings, China Precision Steel. I like the way this bad boy's been coiling up. $2.50 stock, not going to break the bank. But according to this range here, if commodity prices continue to strengthen, I think this thing runs up to about 3 and change. And then there's Ford. Not much to talk about there. Trading at $6, earnings right around the corner. I think that thing goes higher. It's been trading really well. One of my favorites, NXG, Northgate Minerals. And its tough entry point being right in the midpoint of this recent range between about 2 and 2.5. So I don't know. If you get any weakness, you buy it down at about 215. If not, you start scaling into the position, maybe trying a little bit now. If it pulls back a little bit, you kind of dollar cost average into it, buy a little bit cheaper. But ultimately with a stop a little bit south of 2, maybe 190 or so. Love the look of the setup here, though. Next is MVIS, another $10 and under darling. I like the way it's trading. Also kind of a tough entry point, but stocks have been up for 4 days, so what are you going to do? If you don't like the entry point, you can start small and add. If it pulls back, you buy it on a little bit cheaper, but I'd be comfortable just taking a position here. Volume was pretty steady on Friday. I like the way it's been trading, so looking for this as a potential breakout candidate. Should go higher. Level 3, lots of short interest in this stock, and the continuation pattern here has already signaled to go. And trading at $1.59, I could buy it up 5%. I could buy it up 10%. It looks like a pretty good candidate here, and I like the short interest factor in it too. I think that plays a pretty good role, especially if the S&P starts to cruise higher. And then there will be the restaurant stocks that I'm going to be watching this week. PF Chang's, which looks like it's getting ready to break out. It was down a little bit on Friday, which means you can probably buy into this at a cheaper price rather than buying into the breakout. But you look at most of those stocks in that group. Cheesecake Factory, I hit them up this weekend. Wasn't too bad. Their caramel chicken is amazing. And then ticker symbol DIN. Same thing. There's a lot of consolidation patterns going on here in the restaurant stocks. So that's my basket of goodies this week, folks. A lot of chart patterns to go through. Tried to keep the dips, the rips, the breakouts, and the breakdowns small, but it's a manageable list. So that's what I got, and I'm going to run with it. In the meantime, best of luck to you in the markets this week. And this has been the Option Addict. That's been my watch list. Thanks for watching. Have a good one.
Find out what it is in life that you don't do well. And then don't do that thing.